Welcome, and thank you for joining us today for a mid-year home healthcare compliance update. My name is Rachel, and I'm a Senior Marketing Specialist at Viventium. We're excited to have our Consulting Director of Compliance Services, Yonina Scheinweather, and our Senior Director of Product Management, Zisha Glauber, this afternoon as we discuss home health compliance nuances. Yonina is a CPA with 28 years of HCM experience, and Zisha has been with Viventium for 9 years in roles ranging from implementation to product management. Before I hand this over to Yonina, I want you to know that we value your feedback from this session and look forward to sharing with you more insights that will help support your agency. If you have any questions throughout the session, Yonina or Zisha will answer them at the end of the hour if there's time. For more information on our unique offerings for your industry, check out viventium.com/homehealth. A recording of this session will be posted to the webinar section of our website. Yonina, we're looking forward to this session, and I'll hand it over to you to get started.
Thank you so much, Rachel, and welcome everyone to today's webinar, Home Healthcare Agencies Compliance in 2019. And we really have for you today a chock full of information, a webinar chock full of information, a lot to talk about because there's just a lot going on now in healthcare compliance in the HCM, the human capital management areas, a lot of proposed rules, a lot of drafts out there, and a lot of actual action happening in terms of compliance both on the state and the federal levels. I want to encourage you as we go along to use your question toolbar. If you take a look at your GoToWebinar, you have a place where you can type in questions because I do keep my eye on the questions as you go along. And if there's something that's a question for you, it's probably a question for other people who are listening too. So do yourself a favor and do other attendees a favor and just, put that question down. Not guaranteeing that I'm going to get to all questions during the presentation today, but it will certainly, it will certainly be something that I will try to work into the presentation. Basically, the structure of what we're going to do, here you have a laundry list of the sections that we're going to be talking about. We're going to be talking about everything that pertains to general home health care agencies, regardless of what state they're in, right down here through mid-year termination issues, in about the first 40 minutes of our webinar. Then we're going to take a software tour, about 10 minutes, which Zisha is actually going to do, and see some of the really great and remarkable features of Viventium software for the home healthcare industry. And then the last 10 minutes or so of the webinar are going to be specific for New York State, because those of you who do business in New York know that there are some quirks there like spread of hours and wage parity and the less well-known 7th-day wage provision for domestic workers that do need attention if you're doing business in New York. So that's basically the structure. The handouts that are attached are the deck of slides. So if there's any information here that you find particularly useful, or charts or numbers or links, you do have access right there on your handout bar, and you can download it throughout the webinar. You'll have access to the slide deck. So that said, let's jump right in to probably the most timely topic and the biggest thing going down in compliance right now, and that is tax reform and you and your employees. So tax reform is actually something that did not happen in 2019 and not even in 2018. The Tax Cuts and Jobs Act were actually passed at the end of 2017, but we're still feeling the impact, and I would say we're beginning to feel the biggest impact now in 2019. First of all, as you know, for this year, for 2019, federal tax withholding methods for all of your employees, whether it's your home health aides or your office staff, all withholding methods are staying the same in 2019. However, the IRS has encouraged employers to help their employees avoid having lots of underwithholding or even lots of overwithholding. In other words, unpleasant surprises at tax time. And how are you supposed to help your employees do that? By encouraging them to use, and here you have the link, the IRS tax calculator. Now, granted, the IRS tax calculator, if anybody here has looked at it, is not the easiest thing in the world to use. There are some quirks to it, and the IRS is trying to get industry feedback and work it out. But it's better than nothing. And rather than employees finding that because they have, for example, 2 jobs in their family, or they themselves work 2 jobs, that they've been severely underwithheld and they might have a balance due or estimated tax penalties when they go to file their personal tax returns in April, the IRS encourages everyone, every employee, to do a paycheck checkup using this calculator, and also to check out the frequently asked questions, which you have a link to here as well, to make sure that they have the right amount of tax being withheld, especially in light of many changes that happened in tax reform. Now, the IRS has also stated which are the employees who are most likely to be affected. Who really needs this paycheck checkup? Here you have a list of them. First and foremost, it's those 2-income families, usually families where both spouses are working. Doesn't have to be for the same employer, but where there's 2 incomes, or if they have 2 or more jobs, or they only work part of the year, and part of the year they're not working. Anyone who's claiming credits such as the child tax credit, or with older dependents, children over age 17, anyone who's itemized their deductions in 2017 or in 2018. Also, which is probably less relevant to your typical home health care employment population, but people with higher incomes or complex tax returns, or anyone who had a large tax refund or large tax bill in 2017 or in 2018 is encouraged to use the calculator to do a payroll checkup for the current year's withholding. Now, the big news, which just came out basically a week ago, is that the IRS, as they had promised they would, the IRS has issued draft changes for 2020, and we're looking at major changes. And this is something that the IRS was really under mandate to do, and they thought they were going to get it done in time for 2019, and we were all looking at maybe a revised Form W-4, and then they said, no, they're just not going to be ready in time. It's not going to be ready fast enough. We're going to push off these changes until 2020, and they did. But it's happening. It is happening now it's going to happen for 2020. And even though it's only June, and that might sound very far away to, think about how to calculate your home health aid taxes, but it's not too soon to begin thinking about it. And it's very important. You want to make sure that whomever you partner with for your human capital management solutions, you want to make sure that that partner is also looking ahead and planning, because there are major changes. The IRS has estimated between 6 to 9 months of system programming time. And this is something that's going to affect every employee throughout the United States, anyone who has federal tax withheld from their pay. Because the IRS is now going to be implementing 2 different withholding systems. And you see it here on the slide that we're looking at right now. In 2020, there's going to be 2 different sets of federal withholding tables. One will be used for those employees who do not give you a new Form W-2. A new Form W-4. The W-4 is being revised, and in a minute, in the next slide, we're going to take a look at the draft of it. Employees do not have to give you a new W-4 unless they're, of course, new hires, in which case they're going to have to use the new one for 2020. Or if they're existing employees, but they want to take advantage of the new withholding system, then they are allowed to submit a new W-4. But for the vast majority of your existing workforce, they're not going to submit new forms. And so for them, you're going to use the left-hand side of these tables. For the married, there's another one for single, and the IRS is now adding a new status called head of household. And you're going to be using one set of tables if you're using a Form W-4 from before 2020. Or if they're giving you a new form, but they're checking off something that says we want additional, they are not checking off something that says we want additional tax withheld. We're going to see the form in a minute. So that would be using the left set of tables. And if it's a form from 2020 or later, and they are checking off that box that says we want additional tax withheld, then you're going to be using entirely different forms, entirely different tables. So that's a different amounts of withholding depending on the year of the W-4 that you're going to be using. And here it is. Here is the draft. This is not the actual form yet. It's a draft as of May 30th. And this basically, we can zoom in on a bit, is a whole new way of doing the W-4. First of all, as you can see, it's much longer. So be prepared for your employees to be coming to you with questions. And again, you want to make sure that whomever you use as your human capital management solutions provider is also there to help educate you and offers educational materials for your workforce as well. Do they have a pamphlet? Do they have a leaflet that you can distribute, that you can put in as a salary filler for those last payrolls of 2019 to get people used to the idea that things are going to be very different in 2020? Do you want to encourage your employees to submit the new 2020 forms that their withholding is as accurate as possible? If they do, if you have new hires, how will you help them fill out this form? They're used to just saying, well, marital status, a number of exemptions, and that's about it. As you see here, we have 4 steps: personal information, which includes 3 filing statuses now: single, married, or head of household. Step 2, which allows you to check off that little box over there, and that will trigger using different withholding tables. Claiming dependents and credits for those dependents, and these are annual amounts. These are dollar amounts. They're not telling you how many dependents they have. They're putting in dollar amounts here. And then reporting other income, and this is optional. They don't have to tell you that they have another job. They don't have to tell you what other income they're going to have, but it will help them have more accurate withholding and avoid under withholding at the end of the year. And so there's all kinds of other information here about other income and itemized deductions, and you know, it's a very complex form. The IRS has not even, and this is only the draft of it, the IRS has not even released the instructions, not even the draft of the instructions yet. The IRS has said that in the summertime, around July, they'll be releasing an almost final draft. And then in November, they're going to finalize it totally with all the numbers. So when people ask me, you know, what to keep their eye on in compliance in 2019, the biggest issue, if you're doing payroll in-house, is making sure that your software can accommodate the new W-4 and the new withholding tables. And if you're partnering with a provider, you want to be in close contact with that provider, ask them about their progress. Have they tested the new form? Are they implementing the tables? How early in December will they be ready to run 2020 payrolls? These are all important questions that you want to check out and make sure that all of your partners are going to be fully compliant and are going to be able to support the new federal withholding. What about Social Security mismatches? Has anybody, and if you have, you can just click your hand to raise your hand on your toolbar. Has anybody gotten a letter from Social Security saying that, hey, heads up, one of your employees that you filed a W-2, or more than one, their names don't match their Social Security numbers, and you better get that corrected? Well, I've seen lots of these letters going out, and you're going to see more of them because they're going to be sending out another wave of them late in the spring, according to sources at the Social Security Administration. And these letters are not penalty letters. You're not getting penalized, at least yet, for having employees whose names and Social Security numbers don't match on their W-2s and the W-2s that you filed. They're what Social Security calls EDCORs, or educational correspondence letters. And even one employee with a mismatched name and social can generate a letter. The Social Security Administration had used to send out letters like this up until about 2012, but they only sent it out if you had a certain threshold of mismatches, like more than 10% of your employees were mismatched. And then in 2012, they stopped. And just now in 2019, they've started again, but their threshold is much lower now. If you have even one name and one Social Security number that don't match, you can probably expect an EDCOR sometime in 2019. What do you do when you get such a letter? Well, the first thing you do is you instruct your employees to verify their numbers. You can, you know, tell them that you were notified by Social Security that the number that's on file, and ask them to, you know, just check their payroll records, make sure it wasn't just a typo in your system or anything like that. Also ask them to check their Social Security card, and if the number that they've given you is the number on their Social Security card, you want to go ahead and ask them to visit their local office and to clear up whatever the problem might be. Now, what you can't do when you get such an EDCOR is take any form of disciplinary or discriminatory action against the employee. You can't suspend them, you can't withhold pay, you can't impose any type of other process against them. You just have to instruct them and request that they check this out with the Social Security Administration. In home health care especially, It's crucial that when you hire employees, and we recommend this to all of our home health care clients, use what SSA calls their SSNVS, the Social Security Number Verification System, and I've given you the link to it over here. And why do I say it's especially crucial in home health care? Because home health care is one of the industries, as you know, where turnover is usually higher than the national average. And if you take an employee and you don't verify their social security number, and then at the end of the year they're no longer working for you and you get a mismatch letter, you're not going to be able to contact them. You may not be able to find them. They're no longer on your work staff. And then, trying to track down a former employee to correct numbers can be very, very time consuming. And well, you say, well, okay, if they don't work for me anymore, what difference does it make? The difference is that SSA won't charge you a penalty, but the IRS has the discretion for inaccuracy on information forms, and a W-2 is an information form, to charge a $270 penalty, plus on top of it, another $270 penalty for inaccurate information, up to $540 per mismatch. So it's a costly business, and it's a best practice when you hire an employee, after the employee is hired. You can't use it as a screening tool, but after the employee is hired, you can run the Social Security and SSNVS and identify the problem while the employee is still here in your office, while the employee is still working for you. That's the time to clean up mismatches. Let's go on to our next section, which is about the companionship exemption and joint employment. So as you know, home health care aides are no longer exempt from the Federal Labor Standards Act under the Companionship Exemption, at least for agencies. And it's important to make a legal distinction. Your home health care aides are the employees of your agency, and since you're an agency, there is no companionship exemption, just doesn't apply to an agency. So your employees are covered by the Federal Labor Standards Act, which means you have to make sure to be paying them at least the federal minimum wage. And you also have to make sure to pay them overtime at time and a half for all hours worked in excess of 40 hours in a work week. And that's time and a half of their regular rate. And that's something we'll speak about a little bit later in the webinar. What about the consumer, the patient? They may be deemed to be a joint employer because, after all, they're supervising the employee. They may be setting the hours. They may be asking the aide when to come. They might be telling them what to do. And they can well be deemed a joint employer. But if they meet this very narrow definition of the companionship exemption, then they are exempt. Even though they're an employer, for liability purposes, the consumer, the patient, it can be exempt from Federal Labor Standards Act, and the sole liability for paying minimum wage and overtime rests with you, the agency. So first of all, not every consumer meets the requirements to be exempt under the companionship exemption. It's a very narrow definition. First of all, the first condition is the aide has to spend no more than 20% of the total working time assisting with personal care, bathing, dressing, grooming, etc. The worker cannot be doing any medically related tasks, such as the types that a certified nursing assistant or a nurse would do, catheter care, tube feeding, etc. And they can't be doing any general housework for the rest of the family. But if they meet all three characteristics, all three requirements, all three criteria, then yes, then the patient is not responsible for paying overtime. So here's an example straight out of the Department of Labor, and we're going to take a look at how this companionship services exemption works. Brianna is an aide who's working for you, ABCD agency, and you're assigning her to help a senior citizen named Violet who lives on her own, and occasionally Brianna's going to help Violet get dressed and prepare meals, but not too much. Brianna spends only 10 hours a week with Violet, and of those 10 hours, she spends only 1 hour doing personal care. Meanwhile, Violet's able to tell Brianna when to come to her home, what to do while she's there, when it's time to leave. So in that sense, Violet is a direct supervisor and a joint employer of Brianna. Basically, what does Brianna do all those other 9 hours? She keeps Violet company, she plays cards with her, participates in some of her hobbies. So what's the relationship here? Let's look over on the left-hand side of the slide. Under the Federal Labor Standards Act, Brianna is employed jointly both by ABCD and Violet. So that means if like Brianna would fall and get hurt in Violet's home, both ABCD would have liability and Violet would have liability. Or similarly, if Brianna would damage someone or cause any liability, again, they're both joint employers. They would bear joint liability. But Violet can claim the companionship exemption because Brianna's doing less than 20% on personal care for her, not doing housework for the other members of the family because she lives on her own, and she is basically providing fellowship and protection. That means that on audit, if it's discovered that Brianna hasn't received proper overtime, at over 40 hours a week, Violet's going to be scot-free. She's not going to have any liability, and only the agency, ABCD, would stand there liable for any type of liquidated damages or back pay. Now, what about consumer-directed programs? Right now, we're talking about what the previous discussion was about. The previous discussion was simply about regular home health aides under a typical agency situation. But what about at a consumer-directed program, CD or CDPAP as it's called in New York, where it's usually the relative or the caregiver of the consumer is usually someone that the consumer picks. You don't even know the person. They identify them, and you are just serving as a fiscal intermediary. You're just funneling the funds. In most circumstances, unless you're careful about it, you can still be saddled with joint employment obligations. There are at least 42 states that allow the consumer to select their family member or friend as a caregiver, and the reimbursement is coming through the LICSA as the financial intermediary. The exposure here is that if you don't set it up properly and you're paying this person under your federal ID number, you can be exposed to civil liability suits for injury, for damage, and by workers in the consumer's home, and you can basically be held accountable for circumstances beyond your control. You're dealing with a worker that you never selected, you never interviewed, you never trained them, you never supervised them, and you never had access to the workplace to put any type of safety standards in place. Is there anything that you as an agency can do in this case to limit your joint employment liability? And the answer is yes. And if you have an HCM partner that knows how to guide you through this, what you would want to be doing is have every consumer obtain their own federal ID number as part of intake. And then at that point, when you file your taxes, you want to be filing as a reporting agent on the federal level as a Schedule R. And that will be a strong argument in case of any type of a liability situation that you're just a fiscal intermediary. Even on your tax return, you're filing as a reporting agent, you're filing under the consumer's federal ID number. These are all important factors in establishing a separation and singling yourself out, pulling yourself out of that joint employment relationship. That's an important point to keep in mind. And since we're talking about overtime now for workers that are actually subject to your employees and they're not exempt from overtime, I want to spend a few minutes about the proposed changes. I'm sure you've all heard about it, and we actually have a Viventium blog that's, I think it's going to be included in some of the materials that you're going to receive after the webinar. But these are right now proposed rules. There had been an attempt, for those of you who remember the very dramatic attempt at the end of 2016 to change the overtime threshold rules on the federal level, but it was not successful. And now the Department of Labor has come out, has issued a proposed rule. The comment period has closed on it, and it's a much more modest increase in the exemption threshold, but it's important for you to understand how this impacts you. First of all, an employee who is executive, administrative, or professional, so let's say you have a case manager who is doing scheduling, who is doing intake, would be exempt under presumably if they meet the administrative duties test, let's say. You have to go through all the duties tests. If they meet all the duties tests, then you might not have to pay them overtime for 40 hours, but they still have to meet the salary test. There is no proposed changes to the duties test. All those checklists, they have to supervise people, they have to exercise independent discretion, all that's the same. What might be changing, what is proposed to be changing, and likely will change now, is the salary test. And there are 3 changes. Right now, the way it is now, anyone who earns more than $455 a week, which translates to $23,660 a year, is exempt from overtime. You don't have to pay them overtime. Also, you cannot count bonuses or incentive pay toward the threshold. And if someone owns over $100,000, they're considered a highly compensated employee, and they have a shorter duties test to be exempt. That's the way it is now. And employer groups, employee advocates groups have said, this hasn't been updated since 2004. This is outdated. You want to tell me someone who earns $25,000 a year is considered like a highly enough compensated employee that they're not going to get overtime? Those are ridiculously low numbers. We need to raise them. And DOL has recognized that, and so they've proposed to raise it to $679 a week, which translates to $35,308 a year, pursuant to periodic increase, and 10% of non-discretionary bonuses can be used to meet that salary threshold. They've also raised the highly compensated employee, which is not as important in the home health care industry, but it may be if you have executive payrolls, that is something to keep in mind. This means that if you have an employee right now who is earning above $23,660 and you're not paying them overtime, but they're earning less than $35,308, once this rule goes into effect, and we don't know exactly when it's going to be, but once it goes into effect, like I said, the comment period has ended, you will now have to get them to start punching and tracking overtime and pay them, of course, minimum wage, and time and a half for every hour worked over 40. If you have people using their phones at home, going online, doing work from home, that can be counted as time worked. That can trigger overtime obligations too. You might want to review your employment policies together with your legal counsel and decide what policy will you be taking about work offsite. How will you limit it? How will you prevent people from logging into your system if you don't want to suffer them to work, as the Federal Labor Standards Act puts it? Bonuses can be counted toward the threshold up to 10%, and as long as they're paid at least annually. So let's take an example. Let's say you have a case manager, John, and he's getting $35,000. And let's say it's 2020 and the new rule has gone into effect. I'm just picking that as an arbitrary date. We don't know when it will go into effect. Since John is below that threshold of the $35,308, you have to pay him overtime for his over 40 hours. But if you give him an annual bonus, a non-discretionary bonus, let's say it's some type of performance goal-based bonus, and that's $5,000 and you're paying it to him, let's say quarterly, you've now pushed him up and above the threshold, and you don't have to pay him overtime. Why not? Because you're allowed to count, remember, 10% of the bonus. Well, 10% of $5,000 is $500. And you only need another $308 to push him up over the threshold, right? The $35,308 minus what you're paying him, $35,000. So that $500 clearly, you have $308 there, that clearly pushes him up above the threshold. Okay, but second example, same example, but this bonus in contract is only a biannual bonus. Some unusual bonus paid only once every 2 years, so it doesn't help. And therefore, it doesn't bring him up over the threshold. He remains subject to overtime under the new proposed rule, and you would need to be paying him overtime. And here's just a comparison chart. Basically contains all the same information, just side by side. The proposed change to the threshold. And the date, of course, is not going to be 12/1/16. That was the old proposed date. We don't know what the new proposed date is going to be. The DOL is going to have to enlighten us pretty soon about that. And this just helps you see what's coming down the pipe. The impact of the original change was estimated to be 4.2 million workers. It will be more modest because they're not going to raise the threshold as much as they had originally planned to, but it does mean that you need to start analyzing who your newly covered workers would be and to plan about how you're going to be tracking their issues. Commuting to work versus travel during work is something to keep in mind. Commuting to work is not compensable time, but travel during work from client to client, from consumer to consumer is compensable time. Do you want to be blocking remote access to eliminate unauthorized overtime? And are there any other scheduling considerations? Do you want to be reducing people's hours? Do you want to be considering non-discretionary bonuses to boost people up over the threshold? So these are all issues that you want to be taking a look at as you prepare for the proposed regulations. And of course, you can keep your eye on the Viventium blogs, because we do keep on updating all of those who, like to read our blogs about the upcoming changes in this and in other legislative developments. And since we're talking about overtime, it's time to drill down and take a closer look at 3 different types of overtime that are very common in the home healthcare industry. And those are retroactive overtime, what we call retro overtime, automatic overtime, and multi-rate overtime. Since, as we know, since 2015, home healthcare aides are now subject to federal labor overtime requirements. Overtime has become an important part of home healthcare life. So let's first talk about retro. How often is it that employees forget to give in their timesheets or their hours or their dates of service, and a few weeks later or a few months later or a quarter later, all of a sudden they'll give in dates of service for the past? And then you have to start in, well, what does that do to overtime? How do I pay this out? Well, with Viventium, there's no manual calculations and there's nothing. You don't have to get flustered when your employees forget their hours. And here's an example. Johan Bach, an aide with Music to My Ears agency, submitted a timesheet for February 2019, and he showed 35 hours worked. And then a quarter later, in June 14th, he reports 46 hours for the week of June 14th. And he remembered that he had additional home visit of 7 hours back on February 6th, and he forgot to report. How does this work in Viventium? It happens automatically. Let's see what's going to happen. First of all, Viventium is going to take the hours reported back then in February. He reported 35 hours. And he now reported another 7 hours for February. That means of those 7 hours, 5 of them were regular, because he still had 5 regular hours to go, and 2 of them were overtime. The Viventium software will automatically know that those 2 are overtime, even though it's retro. And those 2 hours will be paid at time and a half of his regular rate, not for this week, but automatically the system reaches back and recalculates the regular rate for the period ending February 8th and pays those 2 hours at time and a half of his regular rate. You don't have to do anything, no Excel sheets, everything is purely software driven. Meanwhile, for this week, he reported 46 hours. So that means 6 hours of overtime for this week. And those 6 hours will be paid at time and a half of his regular rate for this week. The total overtime hours on the check will be 8 hours. That's called retro overtime at Viventium. What about automatic overtime? So as you know, many of your TNA packages will only export total hours or daily hours. Viventium will allocate those hours appropriately between regular and overtime based on the state wage and hour law and based on your own rules about double time, for example, for shift differentials. So let's take an example here. Let's assume that Mr. Baker is an aide working in New Jersey, and your TNA software exports 45 hours for him this week into the Viventium software. Viventium automatically knows to pay 40 at the regular and 5 hours at his overtime rate. Another example, let's say that Eleanor is paid double time for her hours in excess of 45. And your TNA software, let's assume that's your own management policy. Your software exports 47 hours this week. Viventium will automatically have your rules set up and will know to pay 40 hours at Eleanor's regular rate, 5 hours at her overtime rate, and 2 hours at her double time rate. Now let's talk about multi-rate overtime, which is also called overtime premium. According to FLSA, overtime is time and a half at the regular rate. Remember what I said we're going to talk about the regular rate? Well, the 3 most common mistakes and the things that labor auditors love to look at when they come in, this is a big way that they make money when they come in, and they're able to make money both for the employees and get liquidated damages going back. Very often there can be 200% liability. So when the three most common mistakes when it comes to the regular rate calculation is using time and a half of the day on which the overtime hours were worked. We're going to see an example of that mistake. Or paying overtime hours at the weighted average rate only, and not disclosing the regular rate on the pay stub. So let's take a look at an example. What's wrong with this picture? So we have a week worked here where you have 10 hours a day. So the last day of those are 10 overtime hours, and we just take 50 hours and we pay it straight across at whatever rate the case is. Let's say she was working for a $10 case, 10 and a half, 11, never mind the numbers, it's just example, and we pay her straight across. Well, obviously what's wrong with this picture is that we're not paying her overtime for those last 10 hours in excess of 40. No overtime there. So now, how do we do it? Do we look back and say, well, since the last day when she worked overtime, it was a $12 case, we need to be paying her time and a half of $12, which is $18. No, that's mistake number one. Don't just look at the rate the day that she worked it. You have to ask, what's the regular rate for this week? Okay, so how does the regular rate go? It's the total pay divided by the total hours. So if we add up the total pay, it's $550. Total hours worked was 50 hours. And lo and behold, the regular rate is not $12. It's only $11. In this case, it works in your favor. It's lower than you thought it was going to be. The regular rate, sometimes called the blended rate, sometimes called the weighted average rate, they're all the same thing, in this case is $11. Great. So now we know the regular rate is $11. How do we figure her overtime? We take the multiple, we multiply the regular rate by 1.5. Okay, very simple, $16.50. Sounds straightforward. Let's plug that into two paychecks. 1 week, Joe March worked a $10 case on Monday, a $10.50 on Tuesday, an 11 and $11.50, and then Friday she got her overtime, $16.50. The other week, she worked in the opposite order. She worked for the higher paying case on Monday, and the rates went down. And of course, that same overtime as $16.50, that's time and a half of the $11. Same jobs, different days. What happens? Well, in one case, she's getting $5.95, and another case, $6.15. There's something counterintuitive going on here. It shouldn't matter the order that she works her cases. Really shouldn't matter. The fact that she worked $10 on Monday here and, you know, a different amount, that doesn't make any difference whatsoever. The amounts should come out the same. The problem is that the system was not doing overtime premium. And this is such a common mistake, and this is such a thing that the Department of Labor, is the first thing when a state auditor comes in, this the first thing they look at, show us your overtime records. We want to see if you're doing it right. You want to check with your payroll providers to make sure that they are using overtime properly. This is the way it's supposed to look. The rate is there, the 10, the 10 and a half, the 11, the 11 and a half, and the 12, which is the straight time rate. So first you figure her pay at straight time. Then you take those 10 hours at her overtime premium rate, meaning the halftime, right? The regular rate is 11. The halftime is $5.50. The hours above 40 is 10 hours. And the halftime applied to her overtime hours comes out to $55. And you show that on the paycheck as overtime premium. And now we're good, because it doesn't matter what order she works the rates, whether the rates are going up or the rates are going down, it comes to the same $605. This is the correct way of calculating overtime. This is the way that Viventium will calculate overtime for clients using our overtime premium method. And this is compliant. And I'll add one more step. In addition to calculating overtime premium, a best practice, which is actually a required practice in New York State, but it's a best practice for all states, is to disclose the overtime rate on the stub as well, so that they know that the overtime rate based on the weighted average is, in this case of this stub, let's say $18. So not only are you showing the straight time rate for the overtime hours, you are also showing what the overtime rate based on the weighted average is. And this is happening automatically all the time in Viventium. This is the way the Viventium stubs will look. Viventium will never change your rates automatically unless you request multi-rate overtime calculation. And of course, always consult with your legal counsel before making any changes to your overtime practices. By the way, multi-rate overtime at Viventium is software driven, and so it will apply to retro overtime calculations as well, meaning if we go back to an earlier quarter or an earlier period, we will figure the weighted average rate correctly, even when there are retroactive hours being reported. We also give you educational materials because sometimes your employees say, well, what's overtime premium? Why does my stub look different? If my overtime rate is $16.50 and I work 10 hours, why am I not getting $165 from? So we give you this very nice little PDF, Understanding Your Overtime Pay, which in very clear, concise layman's terms explains to your employees how your regular rate is calculated, how overtime is calculated. At Viventium, we believe very much in outreach and explanation, not only to our clients, but providing them materials to help them educate and explain things to their employees, because we know that your employees are going to come to you with questions. And we want you to have a partner that can give you answers and make it easy for you to answer their questions. And that concludes the general portion of our webinar. I'm going to now turn this over to Zisha to take you on a tour, a guided tour of some of our remarkable Viventium software. I referred to some of the features. You'll actually get a chance to go in hands-on and see it now. And after Zisha, I'll come back on and we're going to talk about some New York State specific requirements.
Okay, thank you, Nina. So today I'm going to be showing you 3 features in the Viventium software. There's of course many exciting features in Viventium, which we'll be happy to show you all. And if you do want to see a full demo, please send an email to the email address that you got this webinar invitation. But the 3 features we're going to focus on today is number 1, how employees can self-manage their information. The second will be our new GeoTax feature, which is incredibly helpful for clients that have employees that work in states that have complicated locals such as Pennsylvania or Ohio or even New York. If you want to make sure you're withholding the correct taxes, whether it's if an employee lives or works in Yonkers or if somebody lives in New York City, our GeoTax feature takes the guesswork out of knowing which taxes to withhold from your employees. And the last feature we'll be talking about is our business intelligence tool, which gives you full access to your information in Viventium. It allows you to extract employee demographic information, payroll information, and even create cool charts and graphs that can track things like overtime by department and things like that. So I'm going to start with the employee self-service feature. And employees can access Viventium many different ways. They can access via desktop, which we're going to show you right now. Employees can also access Viventium via tablet or mobile phone. We do have native apps available for Android or iPhone. So if your employees have an Android or iPhone, they can download the Viventium mobile app. And all the functionality is available on mobile as well. So I'm going to go ahead and log in. And when an employee logs in, the first thing that they will see, of course, is their latest paycheck. We know that's the #1 reason an employee will ever log into a payroll software. They'll see the latest check date. They can click show to see the complete details of that paycheck. They can also click preview if they want to get a hard copy of their pay stub, which they can then download or email. Viventium offers many flavors, many customizations of pay stubs. This is just one example that shows the dates and time in and time out that the employee or caregiver worked. We can also customize the employee self-service portal by allowing you to choose whether you want to display time off information to employees, whether you want them to be able to request time off through the app as well. But one thing I do want to show you now is if I click on the My Profile page, this is where all the personal information of the employee is saved. You can allow your employees to self-manage some of this information. You'll notice there's a little update link next to the dependents. There's an update next to their personal information and an update next to their emergency contacts. So you can pick and choose which data elements you want to have your employees modify. But I know some of you are freaking out a little bit and saying, well, allow my employees to change their HR information. Oh, that doesn't sit right with me. Well, the good news is Viventium has a very specific way that we allow your employees to change information. All the changes that the employees do go through an approval process which you, the payroll or HR admin, have to approve. So we're going to show you that workflow right now. So let's say we want to change the spouse information. So the employee would click update. And let's say the name was mistyped. It should be something like Michael. And the birthday was incorrect. Instead of January 1, 1976, it's actually January 2. All right. Now, I, as the employee or caregiver, I'm clicking update. And you'll notice that the user interface changed a little bit. It's showing the employee that your dependent change is waiting for approval. It's showing them that even though they changed information here, it doesn't change the HR record until you, the payroll or HR admin, is going to click approve or maybe even decline in the admin section. And they can click view request to see what they're changing. And you can see they change it from Mike Wilson to Michael Wilson, and the birthday change as well. Once you approve or decline this change, the employee will get a notification via email or on their mobile phone saying, your HR admin has approved your change. So let's go ahead and make one more change. We've changed the dependent information. Let's also change the emergency contact. We see this employee has 2 emergency contacts in the system, Henry Wilson and Susan Wilson. We're going to go click update, and let's just change their last name here. And again, we have this emergency contact change waiting for approval. So it's crystal clear to the employee that there's another step that's still pending before this actually gets changed. So I'm going to log out from the employee self-service portal, and I'm going to log in as an admin. Okay, let's go ahead and log in. And you'll notice as soon as I log in, I have a red notification next to requests. It's showing me I have 2 outstanding requests. And these are the requests that we just did. So let's take a look at that. Click on requests. There are 2 requests from Emma Wilson, which is the employee we just logged in as. One is an emergency contact change. One is a dependent change. You as the employer can see the details. So you can click view details, and it'll show you the exact change they're trying to do, so you can make sure it makes sense. Same thing for emergency contact. Now what I'm going to do is, instead of clicking approve or decline, I'm going to navigate to this employee's profile, to their HR record, to show you that the name is not changed yet. So we're going to go to the dependent, and you'll see that it's still Mike Wilson in her profile. So we're going to navigate, this is Emma Wilson's profile. We're going to navigate to benefits, which is where we keep the dependent information. And we see here the spouse's name is still Mike Wilson. Let's go back to requests. Let's approve that request from Mike Wilson to Michael. And only after you click approve will the system update the HR record. Let's go back to her profile. Navigate to benefits. And we see now the name is changed to Michael Wilson. Another point is that Viventium will keep a complete audit trail of all those changes. All right, so if I go to the More category, click on Other, or rather click on Requests, I can see a complete history of all the changes that were ever approved or declined by this employee. And you can, of course, go in and see what that change was. So even though the information is already changed to Michael Wilson right now, it knows it was Mike Wilson before that. Next thing I'm going to show you is our new GeoTax feature. Again, if you're a client of ours and you want to enable this feature, please reach out to your client service rep. But again, the GeoTax feature takes the guesswork out of assigning the correct taxes to your employees. So what I'm going to do is I'm going to go ahead and hire an employee by clicking on New Hire. And there's many ways that you can add an employee to Viventium. We support manually hiring an employee the way I'm doing it now. We also have a talent acquisition and electronic onboarding portal. We also support API or imports from Excel. So I'm going to go ahead and hire an employee. I'm just going to enter a name here. We're going to let the system auto-generate an employee number and give this person a birthday. And we're going to enter an address. Now, just for this purpose, I'm going to enter an address in Pennsylvania because we all know how complicated Pennsylvania taxes are with the PSD codes and LSD codes. So I'm going to say that this employee lives in, I've prepared 2 addresses, in Scranton, Pennsylvania. So I'm going to copy this address, which is an actual address. They live in 800 Linden Street. It's in Scranton, Pennsylvania. The zip code is 18510. Now I'm going to scroll down, I'm going to skip some of these new hire sections, and I'm going to go to the work location. This is a critical part for telling the system which taxes to withhold. In order to know which taxes to withhold from an employee, the system must know where the employee lives, which we just did right here. And it must also know where this employee is going to work. So we have multiple work locations in this company. I'm going to select a facility that's location that's located in Pennsylvania. And I'm going to click Load Taxes. The system is now figuring out what are the correct taxes to withhold. And of course, you can see it brought in federal withholding. Well, that's a no-brainer. PA state. It also brought in Marple Township, which is the worked PSD code. It brought in the resident PSD code, which is Scranton City, because it knows where the employee lives, and the LST tax of Marple Township. Okay, now what I'm going to do is I'm going to go back up and I'm going to change the employee's address, and let's see what happens. So instead of Scranton, we're going to put in the address that's located in York, Pennsylvania. And that zip code is 17401. All right, now let's see what happened with the taxes. Now, as soon as I changed the employee's address, the system recognized that and said the employee's address was changed. It deleted all those tax codes and now prompts you to reload those taxes. We're going to click Reload Taxes. Again, it's figuring out the correct taxes based on those two addresses. It brought in federal again, Pennsylvania. Marple Township is still the same work PSD code because the work location didn't change. It updated with a new resident PSD code, and the LST tax code stayed the same as well. Okay, so this truly takes the guesswork out of knowing all the different resident PSD codes, LST codes, or even other states such as New York or Ohio as well. Okay, last but not least, I'm going to navigate to the business intelligence section. We're going to spend 2 quick minutes here, and I'll show you how easy it is to extract information into Excel, PDF, or many of the different visualizations that we offer from Viventium. So we're going to let that load, and we're going to start with something very simple. All right, you might sometimes get a request for a census information, a list of employees with some personal information, whether it's for your benefit provider. But to get census information out of the system, it's really easy. All you have to do is click the little search here at the top left and start searching for what fields you want to see on your report. Let's say you want to see the address of the employee. Just start typing. The system shows you all the fields that have ADD in it. So we're going to pick address 1. You can search for the city, for the state of the employee. We can even bring in things like the employee's full name, or even break it out into separate columns for last name and then first name. You'll notice that as you're building this report, the system shows you a preview of the live information right here. So you can see, okay, is this the information that I wanted? You can also bring in things like status of the employee. Now, once you have your report, this is the information that you wanted. You can also drag and drop columns around. You might want the address to be before the state. Simply drag and drop. It's really that simple. You can then either save your report for future use or export it to PDF or Excel. So it's really simple. And you can even bring in things like the base rate of the employee. Even payroll information is accessible here in this reporting tool as well. All right. Now I'm going to show you something that's a little bit cooler. Instead of just a standard census report, let's start working with some payroll information. So let's say you are trying to see, which department has the most overtime or has the most hours for particular check dates. So instead of creating a standard table-based report, you can create a cross-tab report, which is very similar to Excel pivot tables. Those of you who use Excel will be familiar with this. So what I'm going to do for this is I'm going to bring in the check date, and I want the check date to be a row or a column in the report. I brought in charge date, which is the wrong field. Let's go back and bring in check date. I'm going to bring in the department where it was paid out of, which we call cost center, and then the hours that were worked. And you see, in less than a minute, we have a report that shows check date by check date, all the hours that were worked by the different departments. So we can see our HHA department on January 6, 2017 had approximately 1,000 hours, went down a little bit after that, went up a little bit after that, and so on. And those reports are also exportable not only to Excel and PDF, but you can even export them as a pivot table. Okay, and you can add things like, how many employees were paid within each department as well. So we have something called an employee count, which you can bring in. And now the system will show you for each check date, not only how many hours were worked, but how many employees worked on that particular check date for that department as well. So 63 employees that worked a total of 1,073 hours. Okay, Yanina, I'm going to hand it over to you now.
Thanks, Isha. And every time I watch you do this, and I've watched you do it many times, I'm really amazed at how flexible Viventium software is, and just the kind of support both for employee self-service and for you know, and for, of course, managers support and client support as well. It just, you know, I always like watching it. You know, I just really enjoy seeing what is available and what there is out there. Okay, so now we're going to jump back for the remaining few minutes of our webinar and speak about New York State specific issues. And as you know, there are many of them. First of all, when it comes to wage parity, Viventium is an expert in wage parity, and we know what you're up against if you're dealing with it, and we give you total flexibility. So first of all, date of service, location of service, and type of service. We understand totally all the different variables going in, both additional wage, supplemental wage, whether it's the 5 boroughs or if it's the counties, Nassau, Suffolk, Westchester, and we give you remarkable wage parity flexibility. You can specify, you can choose how you want to use your benefits, how much you want to pay into each bucket per hour, and if you're paying more cash wage, it'll automatically reduce from the benefit that you're paying. It can reduce in whatever order you choose it to reduce in. So for example, if someone's on a $13 case or whatever, they're a $15 or a $16 case, if there's dollars being paid over and above the base rate, will reduce the fringe benefits and will report less fringe benefits for that particular week. Of course, what is supplemental wage? We can help you educate your employees. We can provide information and guidance to you, although we're not engaged in providing legal guidance. We can direct you to where you can locate information and give you resources. What's the additional wage that applies in New York City only? What qualifies as additional wage? We can also hold your hand through spread of hours issues. And this is something that is less well known, even among New York employers. Again, when a New York labor audit happens, they're looking at your overtime practices, and they're also going to say, are you watching and are you paying spread of hours? And that's built into the law. It's right here. If you've never heard of it, here is the citation from the law. That's where spread of hours is found. It's also on the overtime posters. This is the old one from last year, but down at the bottom, even if you look at this year's, and there's a link over here, we're down here, it's right there. If your workday lasts longer than 10 hours, that doesn't mean that you work more than 10 hours. It means that you're called in, let's say, to do a case in the morning. Here's an example. Alex Graham is working 2 daily shifts for Bill's agency. First, he works from 8 a.m. till 12 noon. And then later he works in the evening from 6 p.m. to 10 p.m. Total time worked is only 8 hours, 4 in the morning, 4 in the evening. But because his first login of the day, which was 8 a.m., and his last log out of the day, which is 10 p.m., reaches a spread of more than 10 hours, then Bells is obligated to calculate and see if they have liability for overtime, for a spread of hours pay. So for example, 8 hours at, let's say, a rate of 10.5, that would be his regular pay. They would have to compare that to 8 hours at whatever the minimum wage would be at that time, plus 1 more spread hour at overtime, and then they would have to pay him the differential. The Viventium will show this automatically, the regular pay, the spread of hours pay, and the total gross. Another example, again, you have somebody getting a higher rate, let's say $11, and they here actually need to get a differential for the week of whatever the case might be, the differential. So the Viventium is going to show regular pay, spread of hours, and the total gross. And to say to the auditor, well, we didn't know the law, the auditor will answer you, ignorance is never an excuse. And why is HHA especially susceptible to spread of hours risk? Why is that important for agencies to be aware of? Because you have shift work. And when you're dealing with shift work, spread strikes often. Just the example we saw. You won't have people necessarily working more than 10 hours a day, but you will often have shifts where the first in and the last out spreads over more than 10 hours a day. You may have overnight shifts. And then you have to be looking at it, well, is it within a period of 24 hours or not? And Viventium software can do this automatically. And retro hours. People will come back and give you old hours for old periods, and they will create spread of hours liability that you didn't even realize existed. Again, Viventium will do that, even if it's retro to 2 weeks ago or 3 weeks ago. But if now these hours that they're reporting have created a spread of hours, Viventium will calculate it and pay it automatically. We will keep you in compliance. Unfortunately, we don't have time to do a long example. I was going to work through some numbers with you to show how spread works, but Viventium's software-driven spread of hours will support HHA retro hour complexities. And you can even use the minimum wage to be using spread for. So for example, if someone's doing work in New York City, you would use the New York City wage. And if someone's doing, another shift in Long Island, you're able to say which minimum wage rate you want to use for your spread of the hour. And the last point I want to make you aware of, and this is something, again, that a lot of HHAs in New York are not, and that is that even though your workers are working for an agency, but they are also covered under the New York State Domestic Workers Bill of Rights, and you have a link to it over here. And it works to their advantage. Even though they're domestic workers, you might say, well, that we don't have to follow the New York City sick pay, which exempts domestic workers. No, for New York City sick pay, they are considered regular employees and they get that sick pay accrual. But for the Bill of Rights, they're considered domestic workers. And one of the provisions is that if they work 7 days in a row, then on the 7th day, every hour they worked is paid at overtime, is paid at time and a half, even if they work less than 40 hours a week. Doesn't matter, they could work 2 hours, 2 hours, 2 hours, 6 days in a row, and on that last day, work, let's say 5 hours. It doesn't reach 40 hours for the week, but still, all 5 hours on that 7th day must be paid at time and a half. And again, on audit, that is what a New York State auditor is going to be taking a look at. I want to thank you all very much for your participation today, and you will be receiving follow-up information about the slide deck, and of course the recording will be available. Be sure to follow us on our social media channels, and I look forward to answering any questions. You can feel free to email me. I am Shineweather. That's Shineweather @ Viventium.com. Have a great afternoon, everyone.